Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario where we are looking for a three-wave corrective structure to the downside in a double zigzag. Inside wave W, we then have a finished zigzag structure in a 5-wave A, flat in a wave B, and another 5-wave to the downside in a wave C. If wave X is finished, we can count a flat structure here inside wave X. And I say if wave X is finished because it depends a little bit on the range locally. If price moves to the downside in this range, we can count a 5-wave move to the downside and then label it a potential wave A. Look for a 3-wave B to the upside and another 5-wave to the downside to hit the bigger support area that I have below price here between 64.8k and 63.6k. However, if price would move towards the upside, then we have a 3-wave structure here, which means that this wave X can become more complex in a W flat than a wave X, and then you look for a wave Y or an A, B, C, which is an expanding flat. Now, by all means, we do not want to hit the 0.7 Fibonacci taken from the start to the end of W, because that would significantly reduce the probabilities for a double zigzag W, X, and then followed by a wave Y. The most bearish scenario is a double 1-2. Here we have a wave 1, flat in 2, another one, flat in 2, and you look for strong continuation to the downside, where again you could have a 1, 2, 3, 4, 5, another wave 1, followed by another 2, and a bigger wave 3 to the downside. What lowers the probabilities for this bearish scenario is that your first wave 2 hit the 886, and the 886 is a rare target for a wave 2, common for a wave B or a wave X, increasing the probabilities that this move towards the downside is part of a corrective structure and not an impulsive structure, meaning the probabilities are higher that this structure to the downside is part of an ABC, WXY, or any other corrective structures compared to a 1-2-1-2. In other words, it then increases the probabilities to sooner or later move to the upside to take out the double top. Looking at the CVD divergences, price has locally been moving to the downside, and we do see some very local bearish CVD divergences, which will be invalidated if price can move above this range. And locally on the 5-minute time frame, we also had some bullish CVD divergences, which will play out if price can take out this high here. If we then look at the probabilities of the different scenarios, then at the moment the probabilities are higher for a corrective structure to the downside, also because of the 4-hour probabilities. And if you haven't seen my previous video update, please click on the card showing up in the screen right now so that you know what we're looking for on the higher time frame. But the probabilities are higher for a corrective structure, as we are looking for a wave of 4 on the 4-hour time frame. But in both of these scenarios, the multi 1-2 as well as the WXY, we would prefer to see at least one more low. Locally over here, the probabilities at the moment are also higher to still take the lows here at some point. We do have the bearish CVD divergences with price moving to the downside, and in this range, very locally, we also have a couple of 886 touches taken from the low here to the high of this range, which does increase probabilities to still take the lows at some point. If price does move towards the upside, then we are looking for a potential X to not yet be finished, but at the moment the probabilities would be higher to move to the downside to take the lows. There is the potential for a swing failure pattern and a retracement to the upside, but that depends on the reaction. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.